Good Monday. This is Jay Brew, co-chairman of Seafried and Brew. What I wanted to talk about today is exceptions to loan policy. And when we think about this post-financial crisis, is that what can we learn from the exceptions that we had to our loan policy? How can we use this as a tool? Because now we're starting to see out there many bankers complaining that other banks are coming in, winning business by offering deals that they think are high-risk type of deals. And what did we learn from the past credit cycle that we've been through? So this exercise of looking at your exceptions to policy is a valuable one in my mind, both for the management team as well as for the directors, and to look at it in maybe an analytical type of way in terms of taking all of the loans that you have on your watch list. And this is one area where our chairman of our bank, Embassy Bank, Elmer Gates, says, what did we learn from the experience? And especially as you go through credits that have had issues, is that what did we learn? Well, one of the things that we learn is that did exceptions to policy that were made when the loan was made be a high risk or a low risk situation? So what we do is that we can start with going through the exceptions to policies in terms of how does this affect your bank, and sitting there and judging whether or not these are high risk loans, lower risk loans, still exceptions to policy, but what do we rank the risk? So when we look at it, especially with experience that people have had with restaurants, is that we would sit there and say that this would be a high-risk exception. When we look at it in terms of real estate loan-to-value over regulator guidelines, once again, I would list this as a high-risk exception. Real estate loan-to-value over policy guidelines, high risk. Outside assessment area. This is a depends based upon your bank's experience and how your management team and directors would look at this. Once again, for many banks that had problems with loan participations this time around, that this could be considered a high risk. For us, as our bank, I would look at this as a low-risk exception. Startups. Once again, at our bank, we really do not loan to riskier startups, that there's significant collateral, real estate collateral, etc. So at least for our bank, it would be a low risk, but you need to evaluate that yourselves. Amortization greater than 20 years. Now, interestingly enough, when I looked at this particular exception in my mind, intuitively I sat there and said that this is a low-risk exception. But when I went through the list of watch list credits, and it kept popping up. In fact, of our watch list credits, 20% of them had amortization greater than 20 years. So statistically, I would have to sit there and say that this is a high-risk exception for our bank. Debt service less than 1.2 times. Once again, I would list that as a high-risk exception. And finally, construction period exceeds 24 months. Intuitively, once again, I was looking at that as a low-risk situation, and you need to be able to evaluate that based upon your own experiences. but looking at it in terms of going through not only your current watch list, but I would then go through and look through every loan that you had issues with during this credit cycle and sit there and evaluate not only the current watch list, but the entire loan portfolio. Now, what can we glean from this? Well, what you want to do is to sit there and say, of the loans we're looking at, for instance, is that how many watch list problem loans versus your total list of loan exceptions fall into that particular bucket where you have watch list or problem loans. Within that is that what is your percentage? So for instance, is that I would sit there and say 0 to 5%, really would sit there and say that the exceptions to policy that went through relatively that it really didn't affect your overall loan quality. If you're in that 5% to 10% range, is that once again I would sit there and say that that statistically would not be of concern, 10% would not be of particular concern, but it's enough of a percentage that I would definitely then dig deeper. And of course, anything over that 10% range, I would sit there and say that exceptions definitely had an impact on your overall credit performance during the Great Recession. So then we can go and look at other factors in terms of how many exceptions. So for instance, you could look at if a credit had 2 high-risk exceptions, was that something that led to a greater percentage of loan problems? Was it 1, for instance, that led to it? But I think that what you'll find is that 2 or more high-risk exceptions definitely had an impact of increasing your overall watch list and problem loan situation. So as we look at it, we can then sit there and say, what were the exceptions? Which is when I went through this analysis, for instance, I mentioned that I had that 20-year plus amortization as really a low-risk exception. But then when I went through this and saw that, for instance, that a credit had 1 high risk and it had 1 low risk, but it kept on coming up, the low risk was that exceeds 20 years, led me to sit there and say, gee whiz, for our particular situation, we really need to consider that really as 2 high-risk exceptions. So when you look at this, you can dig deeper, is that you can sit there and say, what were the exceptions that affected us the most? What do we do with this information now? Is that once again, looking at the past, is that we can't have amnesia going forward. But using that experience, that then as we underwrite new loans, that it's not that we won't make exceptions to policy, but on the other hand is that as a guideline, when you're looking at your underwriting and it sits there, you might put that as one of the weaknesses of the loan if it has 2 or more, for instance, high-risk exceptions, that the directors, as they're looking at approving those loans, should sit there and say, gee whiz, this is either an exception or red flag. And then to use that to deepen the whole process to either approve the loan or not approve the loan. This is Jay Brew, co-chairman of Seafreedom Brew. Have a great week.